everyone. Thank you for tuning in. Let's start today's topics. Investment firm Evercore has reiterated their view that Apple's AAPL premium valuation is justified and could even expand compared to the other big tech companies. Analyst Amit Daryanani highlighted Apple's financial prowess and disciplined stock-based compensation, as well as their high return on invested capital, return on equity, and free cash flow. He noted that consumer staples and/or high-end luxury companies remain the relevant peer group for Apple. Earlier this month, Apple's shareholders elected the entire board of directors and approved pay packages for CEO Tim Cook and other executives. Despite a period of economic uncertainty, it's worth paying a premium for a company as powerful and secure as Apple, just says the board of directors who will reap the benefits. Amazon last month announced ambitious plans to launch its Project Kuiper internet satellites in the first half of 2024, offering commercial tests shortly after. The technology giant plans to launch over 3,000 satellites in low Earth orbit to fulfill its regulatory mandate to do so by 2026. Amazon plans to make 3 to 5 satellites a day to reach the goal. Amazon's standard customer terminals for internet speeds of 400 megabits per second will cost the company less than $400 each to produce. Amazon is truly showing no limits to its dominance of all aspects of modern life, now even space technology. German auto giant Volkswagen has announced their China battery giant CATL's plan to raise at least $5 billion in Swiss Global Depository Receipts (GDRs) has been delayed as Beijing regulators raise concerns over the large scale of the offering. The world's largest battery maker, contemporary Amperex Technology Co., CATL, supplies auto giants such as Tesla, Volkswagen, and BMW. In early February, sources said CATL aimed to go ahead with the listing as early as May. However, the China Securities Regulatory Commission, CSRC, whose approval for the listing is required, has questions about the vast scale of CATL's GDR offering and plans for use of proceeds. GDRs are one fundraising option used by companies to offer investors outside the firm's home bases a chance to buy and trade the stock on shareholders' local exchanges. It takes months of hard work and planning. But CATL's bold plan to raise $5 billion via a GDR listing has been derailed by pesky regulators. Qualcomm has recently been engaged in a legal fight with EU antitrust regulators over rebates given to Chinese phone makers Huawei and ZTE. The U.S. chipmaker has been fined €242 million, $259 million, and is now pleading its case in Europe's second highest court. Qualcomm's lawyer has argued that the Commission should have applied the price-cost test over a longer, more meaningful period. Meanwhile, the Commission's lawyer defended its analysis of Qualcomm's prices as fundamentally correct and robust. Another fine, another court hearing, another potential loss. Apple is reportedly taking a slashing measure to reduce costs with the delay in bonus payments and freezing hiring in certain divisions. According to Bloomberg, the Cupertino, California-based tech giant has traditionally paid out bonuses on an annual or biannual basis in April and October. With the new plan, the April bonuses will be skipped and paid in October instead. Apple has not responded to the requests for comment from the media. Apple seems to be cutting back, but that hasn't stopped them from expanding their premium valuation, according to investment firm Evercore. OpenAI, a Microsoft-backed startup, has released its powerful artificial intelligence model known as GPT-4, which will allow users to create content from both text and images. They have indicated that the new model has far surpassed the capabilities of their previous GPT 3.5 model, with trial. Alphabet Inc.-backed Anthropic, a company focused on artificial intelligence, on Tuesday announced the release of Claude, a large language model that competes with offerings from Microsoft Corp-backed OpenAI. The creator of Chat, Claude is a model that is trained to generate human-like text output in response to prompts, and is designed to limit the creation of dangerous or offensive content. Anthropic has incorporated safety principles into the model, instead of avoiding potentially hazardous subjects altogether. Early access to Claude was granted to Robin AI, a legal contracts analysis AI startup, who said Claude was better at understanding complex legal language and less likely to create strange results. Wonder if Claude is as good as it claims. Because there's nothing like a language-generating AI to make sure nothing inappropriate is generated. The parent company of Facebook, Meta Platforms have announced plans to lay off another 10,000 employees this year and close about 5,000 open roles not yet filled. These layoffs form part of their a year of efficiency effort and would bring their annual revenue per employee to a record high of $1.85 million, based on Wall Street's current projected revenue. Meta's stock has rocketed 78% since the layoffs were initially announced in November 2020, and currently trades at an 8% premium to Google parent Alphabet. However, this move might prove premature. Despite the severity of the cuts, Meta has only reduced its full-year expense range for 2023 by 3%, and CEO Zuckerberg himself doesn't expect any major business improvements. Further, the conceptual metaverse dream, while still central to their future plans, has effectively caused an internal hard sell and inflated costs. Analysts also project that the company's operating margins will average 27%, much lower than the 3-year average of 34%. Meta Platforms seem hell-bent on efficiency, even if it comes at the cost of long-term economic flourishing. This is everything for now on the Wall Street wackiness. See you in another time.